Hey guys, Mike here. So, oh boy, what a day in the market. I mean, super volatile. I'm going to show you that. And what do we talk about? Watch for rejections. And oh boy, did we get plenty of them today. I'm going to show you what's going on in the future market right now, as well as some other charts, a lot that you guys asked about. And we'll kind of look under the hood at everything, see how everything's going. And I'm going to share two charts with you that I share with members, and those who are really well versed in the economic cycle. Definitely want your feedback in the comments on this, because to me it shows late stage, but again, maybe there's an argument to be had on that. I will start with this. It's, to me, funny in a way, not funny, but it's something I showed my son because it is a life lesson for anybody. Can you imagine training your life to be the best speed walker in the world, go to the Olympics, and look at this, I got it, and watch her face. It is priceless. Oh my God. What is fixing to happen here? I just went from gold to silver. I mean, can you imagine that? Ugh. Would you ever get over that? Put in the comments. I mean, would you ever get over that? But that is something to teach your kids right there, man. Boy. Now with the futures, because I do futures more than anything else. Look at this. Here's what you want to do. On the 4 hour, you want to get above that area. 18,448, somewhere in there is where you're looking to get above to continue this push up like we got today, right? Now, what's happening right now is you had some earnings come in, started pushing the market up, and now it's melting down. I'll show you the volatility because we basically started selling off, I think it was after like 2:30. But you can see we got this pop right here on some semiconductor news and earnings. And then, of course, it's melting down and selling off afterwards. But right here in this area, little zone right here, and we'll pop over to the 4 hour because you look at these higher time frames, the daily and the hourly, right around 17,970, somewhere in there. You don't want to break that. If it breaks that, obviously, then you can see more downside. Now, what do we do on the index real quick? Filled this gap to the penny, started selling off right after, okay? Did not move up a single penny, just started selling down, okay? So one gap filled, there's another gap up there, as you can see it up there. Again, bring out the moving averages on this one, and look at right there. Boom, rejected off the 100. You can see it sold down immediately. That's what I said. It's not about breaking the moving averages. It's about the retest. Just happened to have a gap coincided with it. It dropped 1.34% during the hours after that, okay? So that is one rejection. When you look at this, I mean, it shocks me that we were that close to 200. And, of course, it's not a straight line down, but the fact that they move us all the way back up, even when we're close to all-time highs, like hitting that 200. I mean, boy, what a trick that will be for the market, right? Now, SPY, some of you guys like to talk about the SPY, same thing. I mean, you can see it got up there, rejected off that 100 moving average. Again, same thing. As you can see, but I know a lot of you guys, like you said, you trade the SPY and everything, of course, because you're not trading SPX. But, looking at that, those are the rejections. Now, when you look over at the Qs, again, so you want to get above the 100. That's what I say. What's the next level? You need to get above the 100. If you can't get above the 100, nothing else matters, okay? That means we're going back down. All right, so, and we could just chop. We could do that. But you can see the Qs, no rejection, no test at all. What did it do? It filled this gap right here, sold off the rest of the day. And really what it did was it took the SPY or the S&P's Q and just started selling back down, okay? Again, this one has bounced off the 200, got right below it, and it has bounced. It went into correction territory. The S&P 500 missed correction by 0.42, I believe it was, of a percent. So it did not yet, okay? And so so we got rejection on the S&P 500 right there. You roll this over. You can see with the Qs here how volatile this was. Like they ramped this thing up when it bottomed out at 945 to 2.85% move, right? And then right there, boom, down 1.9% going into close. It's down farther now after hours. But yeah, that's the kind of moves we had. That's what happens when volatility is up, okay? Here's another rejection, IWM, right? Off the 50, ends up going all the way down below the 100. So it's below both those moving averages now. Again, sitting right on that 0.79 fib retracement level. This one right here did hit its 200 just like the Qs and bounce. So those are check for 200 moving average. But the market is the S&P 500, okay? And so something to keep in mind. So what do you got to do? If this thing does move up, the IWM that is, because sometimes it'll move differently than the rest of the indexes, right? I'm telling you right now, the biggest hurdle you got, obviously, if it starts doing something like this, that white line, the reason why I said you'll probably get rejected there, I'll be surprised if it didn't get rejected. That is the 2024 original high before we broke it, right? That was the one I wanted to retest when we broke through and kept going, but we didn't retest it right there. See, 2024 high, that was the original one. And so that will be, around 211, 212. That'll be a beast to get back through if it starts to move back up, okay, without some crazy news to gap it above it or something. Now, looking at the Dow Jones, what you got? A rejection, right? Rejecting off the 50, closed below the 50 and the 100 moving average, sitting right on that trend line right there. Didn't hit its 200, okay? So a lot of rejections going on here, right? SMH, no rejection, didn't get back up there. Again, this one bounced off the 200. But when you move over to SOX, what happened? Got rejected off the 200. So another rejection when we move back up. All right, these have been big moves, by the way, too. So another rejection. These moving averages come into play. Got to break through them first. I thought it was going to happen as soon as we saw something I'm about to show you right here, because we had some earnings come in for semiconductors. Semiconductors started to pump real fast, and then they sold off immediately. We'll see what they do with them in the morning or through the night, because once the Asia session opens up, things can change and stuff. But when you look, just going through the semiconductors, you can see rejection from QCOM on its 200 moving average. MU, obviously below its 200 moving average. AMD, obviously still popping up right there. After rejecting off its 200 moving down, Intel's garbage. NVIDIA popped after hours. What happened though? It somewhat closed on its 100 moving average. Definitely the strongest of the two. But the pop though after hours was this right here. It was SMCI, right? I put Pinocchio's nose because that's what that chart looks like, right? But that sold off quickly. I mean, it went up 20% on earnings. 10 for 1 stock split, missed on EPS, beat earnings, definitely projected higher than what people thought, but immediately sold off. And of course, I mean, this is my next one. I mean, it just pushed that nose right back in. Okay, so yeah, and another rejection, which was a good one, was the spreads. Okay, this is the spreads we were talking about, which was going out of control, market was freaking out. Again, you can draw a trend line like on any other chart, and guess what? As soon as it hit that, started heading back south. So spreads are going back down some. We'll see if that's the case. HYG, nice recovery right here. You can see big move down, big move back up. So these are the junk bonds, okay? Again, as long as the bond market is good, as long as we're able to sell 10-year treasuries and 30-year treasuries and everything corporate can sell bonds and all that good stuff, everything is okay. All right, let's just be real about it. It may be rough, but it's not the end of the world. Again, this has got to do a lot with the carry trade and things like that and deleveraging and all that fun stuff. You can see the equal weight ETFs were up really nice today. They're actually up higher than the indexes at one point in time. So other stocks were moving up, okay? Then you have some earnings. Palantir, hey, I mean, you got to give it to them. Big move up, and they held these earnings all day, okay? Unlike some other stocks who gave them all back and then some, right? They held, all right? So basically what you're looking at here is you got liquidity right above it, all right? And you're going to have a gap right below it. So the question is, does the gap below it get filled first? Or are you going to come up and mitigate this fair value gap? As I've showed you how this thing moves when it comes to liquidity and stuff like that. And this is a big move to absorb. And of course, what a lot of this have to do with what's going on in the market, right? Okay, because the market's selling down tomorrow and all that good stuff, people taking profits. Odds are this is either going to stay where it's at or start moving down into this gap right here, which is around 24.88, upwards of like 25 right there. So keep that in mind. And again, upwards on the upper part, you're looking around 27.55 to 28.50, okay, if it continues to move up. And so it's kind of stuck between a rock and a hard place in a way. But good job on the earnings part. Now, for those who love to trade this, when I get this question all the time, I will go ahead and tell you, in phase is sitting at that level again where it got another bump. I don't know what it is about this level, but it always pops going back to November of 2023 here. Okay, it's like 8 months of bumping. Okay, so there it is again. So you could get a spike. We'll see what happens on that one. So I'm just making you aware of that because I know people have played this many times off of that level. Now looking at Celsius, this is the one of the ones did earnings, popped, gave it back all of it, ended up going red. You see that right there? And just bled all day long. What is this? It's like Enphase is a momentum stock. It has zero momentum. Okay, earnings is supposed to give you momentum. It gave it all back. Okay. Again, pull up your stochastic, pull up your RSI. You want your RSI above 50. You want the stochastic above around 80. That's when you normally get your pops. This is the weekly. It's a 5-minute. Let's switch to the daily. You can see no momentum. Stochastic is rolling over the wrong way. RSI is definitely in oversold territory, but that don't seem to mean anything. So you need to get momentum into this stock, okay? And it's not there. Maybe people just aren't buying Monster drinks. People don't eat Monster drink stocks right now. So that's the way it is. So just FYI on that one. Then you go over here, you got Uber, just another one, had a big day on earnings. Thing about Uber is simple. and I'm gonna ask you a question in just a second about this. That trend line is really all that matters, right? It sits between like 66, 68. You can see multiple rejections, and then right there you got a fake breakout, retest, great, we're going to the moon, and then it had terrible news right there, and it just went down ever since. I mean, big drop from like $74 all the way down to 56. And so again, nice recovery on the earnings here. We'll see if this continues, but until you get above that trend line, all of this is for nothing. You understand me? That's just the way it is. Okay. Now, one question I got is, what do you guys, or how do you think Uber is going to react right here? And here's your moving averages, below all the moving averages. And guess what else? Another rejection. Hit the 200, boom, sold down. Okay, so it's another rejection. But how in the world do you think Uber is going to react, or how do you think the stock's going to do if Tesla successfully rolls out robo-taxis, right? And then, of course, you have Waymo, which I rode. That's Google's deal. And then Amazon is rolling out another one as well. Waymo's expanding into Texas, LA, and another city. Might even be going overseas, too. But then I saw Amazon. They got a company out there now. They're testing out. So, I mean, that's, to me, especially the Tesla one, I mean, that's going to be a lot of competition for Uber, you would think, right? And Lyft. And so I'm just curious what you guys think about that, those who really follow those two stocks. I would think it's a minus, but maybe you think it's a plus, and I'm just curious about why, so please let us know in the comments. Now, looking over here at KRE, right, regional banks, clearly in a channel right here, you can see rejection, pops, rejections, okay? And, you know, could, obviously, rate cuts help this one? Sure, you know, definitely could help it. I mean, there's those bond portfolios that were killing it, and the raising of rates and stuff. And so we'll see what happens on this, and you would think that will be the case, but you know, we'll see if it's going to come back down, reject off the middle of this channel and come back down or not. But you would think rate cuts would help. A lot of you guys asked about TLT, and I told you yesterday, I said, you know, you can wait for a pullback, because what happens is if you start, you know, you start to see QQQ get bought up again, you almost bet money what TLT do today. It went down, right? And so with this one, it's not a high flyer or anything like that. Again, a 5% move is a big move for TLT. And so if the big boys keep getting bought up, that becomes a defensive play, or even high beta stuff for sure. Then, you know, CLT is going to pull back, and it's kind of got this little range set out here. But when you look at QQQ, you can see when it goes on these crazy runs, normally TLT either goes sideways, gets range bound, whatever. Not always. They can go in the same direction, but most time you'll see when it's going crazy, this thing's just kind of range bound. All right. And then, of course, when it starts to get sold off, people go into defensive, there's going to be a lot of rate cuts. It goes up, okay? And so just keep that in mind on this one. And if we pull out and actually look and pull up our volume profile and stuff, you can see, I mean, a good base that always holds is between usually 90, 93. Somewhere in there is where really a lot of volume steps in and stuff. So even if it does go down, I mean, that's definitely a nice place to buy, or either DCA down to, assuming the Fed's going to cut. Now, this brings me to those last two charts I told you about. And this is something I put out in a members video about, you know, recession. Are we in one? Are we not? And we've got to do with the cycle, right? And you can see these are new orders, okay? ISM manufacturing new orders. After every recession, you can see a cycle. It's plain Jane, right? After every recession, the unemployment rate's high. That's what's on top right there. And it just trails down, right? As growth, you know, starts to pick up the market, because everybody's getting hired back, and companies are booming, and earnings are starting to look better, and all that fun stuff, you know. And you can see it in all these different cycles I'll show you, right? So that's from 83 to 91. So I'm taking you through all these different cycles. You can plainly see it. And I get over here, and this is going to be going from 91 to the dot-com bubble. Unemployment rate drops off a cliff. You can see the cycle playing out and everything. We hit a recession. Unemployment rate spikes. Again, here you go. Boom, same thing happens. Then we go on this really huge bull run, which the Fed was propping up. Again, unemployment rate goes down. Cycle continues till we hit the recession of 2020. And then you see a huge spike in unemployment like we've never seen before. But then it came down, right? And then orders were doing their thing. But now you're seeing new orders in contraction, right? So new orders in contraction while the unemployment rate is actually moving up from 3.4 to 4.3, which kind of is a fast movement, right? For many reasons we've talked about, okay? But if we throw the S&P over there, the stock market can still move up with unemployment moving up, but it's pretty much headed for a top, right? Because you can see when is the S&P really moving? It's when the unemployment rate is going down, okay? That's plain Jane. You see it on any cycle when you get the big moves, right? Because that's when the economy's booming, everything's great, everybody's loving life, okay? Saw the same thing on the greatest bull run right there. But when you see any time the unemployment rate starts to curve up, that's when you see trouble in the market, okay? You saw it right there around like 2015 to 17. And again, you come to where we're at now. 2022, they sold us down because they saw it start to curve up. They thought, oh yeah, we're going to recession. That didn't happen, right? Employment rate actually kept dropping, but just stayed steady in the threes, which is really historically low. And still at 4.3, we are really historically low when you look at this, okay? And so, the big question is, what's causing this fast rise? Is it truly the slowing down? Has it got something to do with we can't absorb all the immigrants moving in here? I'm talking legal immigrants as well. That's really what I'm talking about in total, right? Moving in or not, okay? That's the big question. And normally when you can see this, when that unemployment starts to go up, that is normally when the market starts to top out, because you can see manufacturing is in recession. Services are very close to going in recession, or I don't mean recession, I mean going below 50, right? Which is actually constrictive, okay? So that's not where you want to be. So I just want to show those to you and get your input. I always like to hear you guys and everything. And lastly, let's talk about earnings here. Obviously, it's starting to rain here. Once again, I apologize. So we got Shopify, Walt Disney, CVS, Lyft, which I just kind of talked about, Robinhood in the after hours, also Oxy, which Warren Buffett loves. And then we do have some decent stuff coming out tomorrow with crude oil inventories, but then there's that 10-year bond auction at 1. And that's what I really want to see as we add more inches of rain at where I live at. And by the way, yes, my house is fine. I'm not in the flood area, so thank all you guys in the comments who are asking about that. Really appreciate it. I have friends who are in flood areas, and unfortunately their house is flooded because it just rains and rains like 24 hours straight, and it's a lot of freaking rain. When you're in a flood zone, your house is going to get flooded no matter how many pumps you got going. So obviously our prayers are with them and stuff, but I appreciate all you guys who asked about that. Appreciate all you guys who watch these videos and put inputs down in the comments. Really thankful for that. Hopefully these videos are helping out some in this crazy time, but we'll see how this goes. Again, I'm watching the futures. So anyway, hope you guys got something out of it. Please hit the like and subscribe button. I really appreciate it, guys. And I will see you guys tomorrow for another click, buckle up, fun one. It's going to be very volatile. Have a good one, guys.